Most traders believe their biggest problem is finding the perfect strategy. It isn't. The market has never suffered from a shortage of profitable strategies. Every year, thousands of traders prove that different methods can make money. Some trade breakouts, some trade pullbacks, some trade gaps, some trade price action, some even trade with indicators that others laugh at. If completely opposite strategies can both make money, then the strategy was never the real problem. The trader was. Here's the uncomfortable truth. Every profitable strategy eventually enters a losing streak. Every edge goes through periods where it looks completely broken. During those moments, the emotional trader abandons the system and starts searching for another strategy. The systematic trader doesn't. That's why one becomes profitable while the other spends years chasing certainty that doesn't exist. The biggest difference between professionals and beginners isn't intelligence, it's consistency. Imagine two pilots flying identical airplanes. The first pilot follows the checklist before every flight, every switch, every procedure, every emergency protocol. The second pilot trusts his feelings. Some days he skips the checklist because he feels confident. Some days he changes procedures because he had a dream the night before. Who would you trust with your life? Trading is no different. A systematic trader operates from a checklist. An emotional trader operates from feelings. The market doesn't reward feelings. It rewards repeatable decisions. But here's where most traders make a mistake that quietly destroys years of progress. Why one trade means nothing. Here's something most people never realize. Every trade is statistically meaningless. Read that again. One trade means absolutely nothing. A casino doesn't care whether the next customer wins, because the casino isn't betting on one customer. It's betting on the next 10,000. Professional traders think exactly the same way. They never judge themselves by one trade. They judge themselves by 100 trades. That's a completely different mindset. Most beginners wake up asking, will today's trade be a winner? Professionals ask, did I execute my process correctly? Notice the difference. One focuses on outcomes. The other focuses on execution. And execution is the only thing you actually control. The market owes you nothing. It doesn't know your stop loss. It doesn't care about your monthly target. It doesn't care that you've already lost 3 trades this week. It simply moves. Trying to control the market is impossible. Controlling yourself is the entire game. That's why systematic trading is powerful. It removes unnecessary decisions. Decision fatigue is one of the biggest hidden enemies in trading. Every time you ask yourself, should I enter? Should I wait? Should I move my stop? Should I take partial profit? You're burning mental energy. And by the time the best setup appears, your brain is already exhausted. That's why professionals remove almost every decision before the market even opens. Systems beat motivation. A trading system eliminates most decisions before the market even opens. The rules are already written. The setup is already defined. The risk is already fixed. The exit is already planned. Now you're no longer negotiating with yourself. You're simply executing. This is exactly why elite athletes have routines. Basketball players shoot free throws the same way every time. Golf players repeat the same swing mechanics. Olympic swimmers follow identical warm-up routines. Not because they're robots, because consistency produces predictable performance. Trading works exactly the same way. Professionals don't wake up feeling inspired. They wake up prepared. Here's another truth that beginners hate hearing. Discipline is overrated. Yes, discipline matters, but systems matter more. Because discipline depends on motivation. Systems don't. If your trading success depends on waking up motivated every morning, you've already built a weak business. Businesses don't rely on motivation. They rely on processes. McDonald's doesn't make the same burger millions of times because every employee is passionate. It happens because the system guarantees consistency. Your trading should work the same way. The less room you leave for emotion, the more room you create for probability. But confidence is still missing from the equation, and most traders build it the wrong way. The secret of consistent profitability. Most traders think confidence comes from winning. Wrong. Winning creates temporary confidence. Losing destroys it. Real confidence comes from trusting your process. Think about a surgeon. Does a surgeon panic because one operation becomes complicated? No, because years of systematic training have taught them to trust the procedure rather than the pressure. A trader should think the same way. Your confidence shouldn't come from yesterday's profit. It should come from knowing that your system has survived hundreds of trades before. Now here's the biggest paradox in trading. The traders who try hardest to make money usually make the least, because they're constantly interfering. They close winners early. They widen stop losses. They revenge trade after losses. They double position size after wins. Every emotional decision changes the statistics of their edge. A trading edge only exists when it's executed consistently, not occasionally, not when you feel confident. Every single time. Systematic traders understand something deeply important. Their job isn't predicting. Their job is executing. Prediction feels exciting. Execution feels boring. But boring is profitable. The market doesn't pay you for excitement. It pays you for consistency. If your trading feels like an action movie, you're probably gambling. If it feels repetitive, you're probably building wealth. In the end, profitable trading isn't about becoming smarter than everyone else. It's about becoming more predictable than your emotions. The market is already chaotic. Your mind doesn't have to be. Build rules. Build routines. Build checklists. Then trust them long enough for probability to do its job. Because the traders who survive aren't the ones with the highest IQ. They're the ones whose behavior stays the same whether they win, lose, or do nothing at all. And that's why systematic trading isn't just one way.